Afternoon, how are we all doing? Afternoon, Andrew, Steve, it's time. Rob, how are we all doing? All good? Made lots of money on the DAX this morning. Very nice drop on the DAX. Has the opening range breakout gone? Weird. Anyway, the OLB was there. So that was your opening range break today. Why is it deleted? What have I done? Oh, I've been mucking about with the settings, haven't I? Right, don't worry, it's me. Yeah, so nice drop on the DAX today. Pre-market opening range break was very nice. Pulled back, dropped. It's just bounced off of the previous day's low on the DAX. So the areas I said this morning to watch out for were yesterday's low, which we tapped straight into. Previous day's high, which we tapped straight into. Then yesterday's low was second target, which was the top of the propulsion gap, and then ADR. So bounced nicely off of yesterday's low. All the limit orders were triggered. I took some trades on that this morning on that Surge Trader account. So made $4,000 basically, 1,500 odd on that. And then I scaled into two positions there and there, which I've closed out there and there. So a reversal that's just gone in. So yeah, pretty good moves on the DAX. Going to trade the NASDAQ and the DAX. No, the Dow, sorry. This afternoon. See if we can get up the leaderboard. So Surge Trader, I am in position 84 out of 4,200. Looking at the leaderboard on this competition, 90% of these people on, or pretty much the whole of page one, has broken all the rules. So they're all going to fail because you can only take a maximum of 10 lots in total on your account. This guy is well over leveraged. He's scaling in multiple times. So's this bloke. Everybody here is not aware of the rules of 10 lots. So either Surge Trader are going to ignore that rule, or they're all going to blow it, and I'm going to win. Yeah. Anyway, there you go. No news today. Canadian bank holiday, and yeah, there's no news. So first news is coming up tomorrow with the PMIs. There's been no other news this morning. Actually, there has been some news this morning. Tell a lie. We've had a little bit of talk this morning from the Fed. It's a close call, June meeting, whether to hike or pause. Maybe that we have to go north of 6%, but it's not clear. So again, more potential rises for the US dollar. We will have to move rates higher to tame inflation, Bullard said. I'm expecting 2 more rate hikes. So it's not confirmed, but potentially we might have a bit more upside to the US. The US dollar hasn't really paid an awful lot of attention to it. Just a quick overview of yesterday's results. And this morning, for those that weren't in the live room in London, we did 1.39% on Friday. This is the ADR reversals strategy. 1% banked today, sitting in 0.44% drawdown at the moment. H1 M5 mean reversion banked 0.4% on Friday, banked 1.2% this morning, sitting in 0.17. H4 RSI extensions 1.97 banked on Friday, 0.12 drawdown control done today, 3.1% in drawdown. This one's the H4 set file is struggling this month. I think it's just to do with the speed of movement. We've had a lot of really slow grinds, and the H4 is not as responsive as H1, so it's struggling a little. It's done 13%, so it's not, it's done well. It's done 13%, but it's struggling at the moment. It's stuck. H1 hedging, 1.57% banked on Friday, 0.13 banked today, 8.89% drawdown. Nothing particularly worrying there. Euro US dollars in 1%. Swiss yen is in 1%. Euro Swiss almost 1%. So, but there's nothing in any drawdown really. So there you go. We have 4 minutes to the open. Hello, everybody else that I haven't said hello to. Baggy. Ezekiel. Diamond. Derej. John. Afternoon. Virginia. Doreska. Stefan. Afternoon all. ADRs. We got a few ADR hits today. Swiss franc was on a rally today. Swiss franc has been on the march, big style. And the yens have had a little bit of movement as well. So basically, it's mainly the Swiss franc that's been moving today, as you can see. So Aussie dollar Swiss, Swiss yen, Euro Swiss, Euro yen, and the pound Swiss. The Euro moves with the Swiss. So there's been a fair bit of movement on ADRs. We'll have a look at all of those in a minute after the open. There's a few RSI extensions as well. Swiss yen being the biggie. Another big push on the Swiss yen. So we'll have a look at those in a minute. Dow Jones for the US. We've had a bit of a drop on Friday. Came back, filled that propulsion gap. We are still rallying up, though, on the Dow. So upside targets for the Dow today are yesterday's high, which is Friday's high. That is also last week's high. And the downside targets, we've got yesterday's low, which is not far away, but then previous day's low, which is the top of that propulsion gap. So all targets today within ADR. So easy to get down there, easy to get up there today. So we see where we go from the open. We've got a couple of minutes to go until we get there. NASDAQ, that sideways a little bit on Friday. Didn't move anywhere near as much. Dow's really coming down pre-market. So much tighter range on the NASDAQ. Very small movement back down to Friday's low. So we may get a bounce there and not far to go up to Friday's high either. Really tight range on Friday on the NASDAQ. But as you can see with everything, all these propulsion gaps being left to the downside as these indices are starting to rally now. The fact that the US dollar wasn't particularly impressed with what Bullard said this morning, I would say potentially we might have a bit more movement to the upside, but we'll see. So we'll watch those two on the Surge Trader account because why is the DAX still trading with buy and sell stops? I thought I'd told that to stop. Have I not got the time right on that? Oh, Christ, no. Sorry. That should be... that should be there. Stop that trading. Okay, so we watch the Dow and the NASDAQ, see where we go. Hopefully everybody made some money this morning on the NASDAQ, on the DAX even, with some decent movement there. Lots banked on the position trading strategies as well this morning. So good day so far today. We got two minutes to the open. Why is the timer not working? Opening range breakout isn't working at all. Nothing's working. Why is nothing working on this platform? Fine. I'll do it manually. What? Oh my God, look at that. 5 contracts long on the NASDAQ. And I'm out of margin. You can't even take 5 contracts long on the NASDAQ without getting any margin hit. This platform is terrible. Right, so I'm taking the 5-minute pre-market opening range break, although I've taken it way too late. So your 5, 10, 15. So that's your 5-minute on the Dow. That's your 15-minute pre-market. That's triggered short. We obviously triggered long. That's your 5/15, pretty much the same on the DAX, which is a long. See where we go. I have to manually trade this. There's something wrong with this platform. None of the indicators are working. Look. I've got no propulsion gaps. I've got no support resistance. Nothing's working on this thing. And now it comes to life. Weird. Something wrong with the platform, isn't there? There we go. Surge Trader. Good prop firm. Probably just me, but I've no idea why nothing works, basically. Anywho, so looking to flip short on this if this stops out. I'm going to have to do all this manually. Bit of a pain in the ass, but never mind. So NASDAQ Globex high is there, which isn't far away. If we break that level, we should have a good run up and retest Friday's high, hopefully. See if we can get out the top, though. Doesn't seem to have an awful lot of volume at the minute, either way. Afternoon, Neo. DAX is pushing back up towards the highs as well. Everything rallying. US dollar's looking a little bit weak at the moment. Okay, NASDAQ's testing Globex high. So just watch for some resistance here. Dow doing the same. Pop through. So we threw out the highs. Use risk on that. That's another bag. Should I take it? Okay, so pretty good move on the NASDAQ there. So that was, how much was that? So it's a 3R return on the pre-market 5. Very nice. So we'll see where that goes from there. So that is nigh on 4.5% banked. So it puts me on what, 4.7%. Let's see where we are on the leaderboard now. So I'll be sitting in around about 60th. Hasn't updated yet, has it? Oh yeah, 4.7. There we go. 72nd. Not bad, eh? Not bad morning's work. 4.7%. Unfortunately, I couldn't take both of them. Otherwise, that would have been a stop out and a profit as well. But never mind. So there's your 5-minute opening range. See, now the EA has come to life on there. But for some reason, oh, that's, yeah, it's different. Sorry, different terminal. Not with it today. So there's your 5-minute opening range on the Dow and your 5-minute opening range on the NASDAQ. So see if we can get continuation push on these two. I'm not going to trade that anymore. I'm just going to leave that to go. So that's 5% banked today on that Surge Trader. That'll do. I'm literally just going to play opening range breakouts on that. Wait for all these guys that have put in these ridiculously big gam. Look at this bloke. Look, 70%. Right? He's got a 95.83 win rate. Literally, it's just scalping the DAX. But taking ridiculous contract sizes. So those four, 1253 to 1305. So what's that? 16. It's 35 lots short on the DAX. You're not allowed to do 35 lots. You're only allowed to do 10 max. So nice strike rate though. We have to look him up. See what his strategy is. Right. Let's have a look at, so there's your opening range breakout on the Dow. It's just triggered long up at the highs there. Big opening range on both of these today. So you're going to have a very large propulsion gap put in on both of these. So you've got a propulsion gap about to paint in there when this candle closes, assuming it doesn't drop. So if that holds, obviously, we look for a rally up to the highs on both of these. So these are your levels. That's your yesterday's high level, and we've got a big propulsion gap up there. So probably another candle pretty much the same to the upside. And NASDAQ, we are tapping straight into that high now on the NASDAQ from the previous day, which is where we closed on Thursday last week. But that's where I'd be looking to go. So watch that level for a drop. If we can get there, obviously we've got to get there first. It may not even come and test it. So we'll see what happens. Good opening ranges though. Right, let's look at these ADRs. So there's a few ADRs today. A lot of these have already played out, as you'll see on the ADR here. We've got these three trades here. These are absolute beauties, look. So we've had the pound Swiss, the euro Swiss, and the Aussie Swiss all entered this morning, or all entered today, 22nd, and all exited today within a couple of hours. So straight in, straight out ADR reversals, $600. Very nice. So we'll have a look at those. So Aussie dollar Swiss is the first one, pushing up to the highs again. So Aussie dollar Swiss dropped down. So we came straight down this morning into ADR, straight off of ADR, reversal alert, plus retest, bang, out, done. Swiss yen. So that is still sitting up and at the highs. So this is ADR, obviously here. There's your reversal alert, which has just gone in. We're just retesting at the moment. So potentially we're looking at that being the M pattern, pushing back down somewhere into these highs here. So opportunity for a short on the Swiss yen. Very strong still, the Swissy though. Euro Swiss. This was an H1M5 entry as well. Look. So that's the entry there. H1M5, straight in, straight out, or ADR. So this was a reversal at 125 ADR. Straight in, straight out, done. Euro yen. So that one's come off of ADR. We haven't had the reversal alert just on that yet. Nearly. So we just tried to put the reversal alert in and came out the support rectangle there. So we haven't had a break on that yet. Straight into 100 ADR. We've still got weakness in this yen. So we are still getting movement up against the yen. So you haven't had a reversal, haven't had an entry on that one yet. Pound Swiss was the other one, which is straight in, straight out. H1 extension as well. Straight in, straight out. Done. Very nice. And that was an ADR reversal. Very nice and tight entry. All done. So there's all your ADRs today. 3 of those already played out. 1 not triggered. The other one, you're in. I think it's the Swiss yen, wasn't it? Yeah, so Swiss yen, you would be in at the moment, not gone anywhere. Euro yen, you haven't had to trigger yet, but the other Swissies have all played out, all hit target already. RSI extensions. So there's a few RSIs to look at. Just going to move that ADR dash back over because we only had it over there because we were looking at the monthlies. So RSI extensions, Aussie dollar, New Zealand dollar. That's extended on the 4-hour. So we looked at this one this morning. This was the only thing that we had extended this morning. Not extended on the hourly. Last entry on this one on the hourly mean reversion was up here. And that got out 2 days later. The H4 is extended to the downside. So we looked at this morning. It looked like it was starting to push back up. Then we had a little bit more of a push down. Now it's looking like it's starting to push back up again. So it is nicely extended. There's no divergence on this. So this is good solid strength that we've got going on here down at this monthly level. So they bought this monthly level up 3 times and then we broke through it. So we are expecting this potentially to be a short. So it hasn't really had a pullback on this move yet, though. So I would expect to get some kind of pullback on it before we start a new leg, if we're going to start a new leg. So this is a really good spot for an entry long Aussie New Zealand. If it doesn't mean revert from here and we don't get some kind of pullback profit take move before it drives down further, what you're going to get is some kind of accumulation then and probably a drop. Your drop's going to come back down into this level, which is 225 ADR. So entry there, couple of scale-ins on the way down, and then exit, because it won't have done a profit take until it gets down to there, which is very similar sort of this move here, where we didn't really get a good solid profit take and then we popped back. We'd be doing the opposite if we did it the other way to get out. So good looking opportunity. Aussie New Zealand longs nicely extended below the 25 level, so really nice entry, solid entry on that one. Swiss yen is your second entry. That's a 4-hour and an hourly. So hourly RSI extension to the upside. Just got over the 70 level, not quite extended above the 75, so it's not right for me just yet, but it is still a good entry. It is an ADR reversal as well. So if you look at this one, we've got solid move up, hasn't stopped, hasn't had a profit take move. It's just been very slow and orderly on its climb. As you can see, we just had a couple of big pushes in there, accumulation push, accumulate push. So it's really, really slow on its way up there, which is why you haven't really had a decent RSI extension on it. So it's ADR today. We've just taken out that high. So this could well be potentially just sweeping the high, taking that liquidity, and then they'll run back down and do a profit take on the move here. So back down into that propulsion gap. If you measure that, that'll be a 38 retracement. Place. So assuming that this is going to come off of ADR, obviously, if it pushes further, it pushes further. But if we're going to come off of ADR here, this is a 38. Look, that propulsion gap is a 38 retracement. So if we're going to do a shallow retracement and continue, that's where I'd look for it to come back down to. If we're going to do a deeper retracement, somewhere down to there, in that zone, or a bounce back up, assuming we are going to continue long, obviously. There's no reason why we shouldn't. We are expecting the euro to power up, which will take the Swissy with it. And obviously when the Swissy goes, the euro goes with it as well. And there's nothing from the yen at the moment. No signs, no talk, nothing. It's just got no strength whatsoever. So I wouldn't expect much of a pullback on it. Maybe if the yen powers up, it might power up for a day or two to bring it down, maybe 1.5, 2 ADR maybe, but then no reason why it shouldn't continue to push. So good reversion opportunity, just about extended on the hourly. 4 hourly though, that is very extended. So if you look at it on the 4 hour, obviously we are much more extended. We're above the 80 level now. Last time we were above the 80 level was there. And as you can see, this is exactly where I got in on the hourly, and we got that little bit of a squeeze there. So there is potential for that to happen again, and it just to kind of sit there because the yen's just got nothing. Until they intervene on the yen, there's just no reason for it to come down. So for anything to come down against the yen, because it's got no strength. So upward movement on that that push. So I'm just turning the volume down a sec. So looking for a pullback on it, but as you can see, it's really orderly. So it's not had that big strong push where we're expecting a big snapback. It's just been grinding a little bit like that move there. So it is a short, not the best in the world, but 50-50 shot. It's either going to come down and it's going to do a profit take move on that, and then it's going to continue on a leg up, or it's not. If it isn't, you're going to have to deal with it exactly the same as we did there. Look. So we got into 4 positions on that one and exited. Got a feeling that might have been an aggressive one. No, that was just normal. These were just standard entries. There was no aggressive on that. Just 4 entries and out. So that is your Swiss yen. That's very extended on 2 time frames. Euro Swiss is extended, so it's all the same stuff we've looked at today. This was an ADR hit, extended to the downside on the 4 hour. So it's a 4 hour H4 M5 entry. Your entry was down when it updates, down there this morning. So you kind of straight in, straight out on that one, really, depending on what you were looking for distance wise. Let's see if the EA took that one. Yeah, straight in, straight out alert. Got in on the M5 reverse alert, and it's out with half an ADR. Done. Very, very quick entry, that. Very nice. So yeah, in and out, done. Unless you're holding it and you're expecting it to go higher, but I'm not. I'm out. New Zealand dollar yen. Again, extended to the upside. Got out of this one on the hourly on Friday. This morning on this drop. So again, these yens really got no strength whatsoever. This is extended now on the 4 hour. It was extended on the hourly last week here. That was the extension. And then obviously we pushed up, took a second entry, did a bit of drawdown control, took a third entry, exited all 3 today. Still pushing. Good example of why we keep our average within ADR. Yeah. Push down. That's all we need. An ADR down. And we're out. So this one's a 4 hour RSI extension. It's been extended since the hourly entry as well. So if you're in this on H4 M5 or M15, you're probably still in it unless you'd have got out on that, depending how you got your EA set up or your trading, your entries. New Zealand yen. Yeah, still in it. Look, 0.69 drawdown, 2 positions on. So H4 hasn't had an exit on that. The reason the hourly got out on that is because it did a little bit of drawdown control and it scales in a little bit quicker. So that's what I mean about these H4s. H4 is my kind of go-to time frame. I've always traded, and it's my kind of bread and butter. But I've been trading the hourly now pretty much exclusively for last 6-8 months. And I have to say, the hourly is in and out an awful lot faster. And you get stuck less than you do on the 4 hour entries. So I much prefer the hourly at the moment. However, obviously the hourly will get into more drawdown in a squeeze because it's getting in quicker and it's scaling out quicker. So it's just one of those things. There's never going to be a right or wrong. The 4 hour at the moment this month, obviously it's doing very, very well, but it's just getting a little bit more stuck than the hourlies because we're getting some of these moves which are just, this is when it doesn't do well, when you get these grindy moves. What we're looking for, and the whole purpose of mean reversion, is this elastic band getting stretched fast. And the snapback is where you take your profit. So we get stretched and snapback. When you climb so orderly and you get embedded, and this is where you see the embedded RSI, when you get these pushes where the market is just squeezing the short side all the time, it's a lot more difficult to get out on the 4 hour time frames. But then again, you get in usually wider apart, and because it's slower, you get less entries, so therefore you take less drawdown. It's just a much slower, same as everything. If you trade in M5, you're scalping, you're in and out multiple times a day. If you're trading the daily charts, you're in and out multiple times a month. H1 and H4 are kind of in between, and H4 is the slower version of the mean reversion. So you're always going to be a little bit slower with the 4 hours. But those are your entries at the moment. There are no other setups apart from Swiss yen on the hourly. So everything else is kind of already played out. Done, dusted, banked. EGB, what's up? How's it going? Amar, afternoon. EMAC, in a prior session, you mentioned that the 5-minute ADR reversal typically has larger drawdown than the other strategies. Yeah, basically, main reason, who's disconnected there? Me, is it? No. Robo Forex disconnected. Woohoo, look at that, Dow. So Dow opening range break to the upside instantly failed, undone the whole thing. Now you've broken out to the downside. Tricky. So yeah, this is my connection this end. Let me just check the H1. So this is the H1 M5 mean reversion account running absolutely fine, not frozen up. My terminal here is frozen up. Where am I connected to? Czech Republic. Where's this one connected to? Finland. Just goes to show you, it's your connection to the actual broker location that causes these freezes. It's not the account, it's just the broker location. So Czech Republic just froze there. Finland, absolutely fine. Yeah, ADR, obviously, with ADR, you are getting in quicker with ADR because obviously all you're doing is you're taking an extension on the daily. And if the market is pushing because it wants to rally and start a new run, you're going to get in on a mean reversion trade, which isn't going to mean revert. So you need to get in, and the thing is, because it's not getting in using RSI, you're not going to get into trades that are extended and stretched necessarily. You're extended and stretched on the day, intraday, but it could be the start of a multi-day move. Whereas with the RSI, normally by the time you're extended on the RSI, on the hourly, for example, you've had a multi-day move to get there a lot of the time. So you're that bit more stretched. So when you get into an ADR reversal, if it doesn't work, you can potentially be in it a little bit longer. So therefore, it takes a lot more drawdown. The other thing about the ADR reversal set file is it tends to scale in faster. You can obviously change this and you can go and back test this. But with the ADR reversals, the optimal that I found was half an ADR rather than 3/4 of an ADR to 1 ADR, which is what we do with the H1 and H4 RSI mean reversion strategies. So because you're scaling in quicker, if you get a reversal alert and then it pushes again half an ADR and you get another reverse alert, so let's say, for example, you hit 175 ADR, you'll be in two positions. If you then accumulate and then the next day it pushes an ADR against you, you'll be in 4 to 5 positions within 2 days. Yeah. So obviously your drawdown is going to be faster and quicker because you're scaling in closer together. So it doesn't necessarily get you into a much larger drawdown in the account because you're still scaling out of those positions. But because you're getting in fairly close together, you can't get out too quick. Otherwise, what you'll do is you'll just end up hemorrhaging money before you get out and you won't make that money back. So it's a trickier strategy, but in normal market conditions, Euro Swiss has just exited. Look, I know. I didn't. Sorry, something else. Something else just closed there. US dollar yen just closed out. Yeah, so you're basically, you will get into a little bit more drawdown on it. If you look at it, let's look at some ADRs today. US dollar yen, there you go, ADR. So we just hit ADR on that one. So if you look at the RSI extensions, the ADR extensions today, so let's look at Aussie dollar Swiss. Yeah, so Aussie dollar Swiss dropped down onto H1. Yeah, so H1 RSI is just extended below the 30, but it hasn't got below that 25 level, which is what I'm using at the moment as extensions, right? So I haven't taken that long. ADR, it hit ADR and it has, and ADR banked it today, right? But H1 didn't even get in because it wasn't extended enough. For me, if you were using 30, you would have got into that. But the ADR reversal triggered an entry, whereas it isn't extended there. So there is potential for this to maybe have done the ADR, not hit the target, and then push down on its way to getting really extended. Well, Forex in Czech Republic's having a bit of a problem today, isn't it? So because it's not extended on the RSI, there is more room for movement. because we know it can obviously get extended way beyond the 25, and that's when we're primarily looking to jump into those entries. So if you get into one there and it drops further, you won't get into it on the RSI mean reversion until it's all the way down, extended down there. So it's a much more stretched elastic band with the H1 RSI mean reversion strategy. However, with the ADRs, it will be in and out and banking a lot faster, as you can see. So we're sitting in 0.45 of drawdown. Look at it. This it's done 8.39. It's done 1%, 1%, 0.26, 139, 0.85, no drawdown. So it will have periods when the market is moving very nicely and orderly, and it's putting in big moves and then pullbacks and big moves and pullbacks. This thing banks beautifully. When the market goes into a squeeze, this takes more drawdown than all the other strategies. Horses for courses. Yeah. So there's no this strategy. I think it was in March. If you go and watch the video on YouTube about March's results, I think you'll find the ADR reversal strategy banked more than the rest. So it really varies. Stupid advert again. I'm not buying your silly game. So we did 66%. So H4 did 7%. H1 did 16%. ADR reversals, look, 26.5%. See, this in March, this banked way more than any other strategy. Yeah, and then this month, it's been absolutely trounced. It's done 8.93, whereas H1 mean reversion's done 20%. It's, I mean, with strategies, and this is what I keep saying about prop. Doesn't matter what your strategy is, it's going to have good months, it's going to have bad months. If you trade multiple strategies, you're going to have some of those months where some of them are going to lose. You're going to have other months where they're going to win. And overall, as long as the multiple strategies you're running come out with a positive equity curve, you can't really ask for more, can you? So, but if you want to trade prop, H1M5, I would say, is probably your best bet. I don't know. It's going to vary each month. Which time frame are you using with ADR? There is no time frame. ADR is ADR. But entries are on M5. Refinus. I think I said that right. So ADR is the average daily range. That is exactly the levels are exactly the same on every time frame because it's the average daily range. So it doesn't matter what time frame you look at; those levels are the same. It's the daily range. Your entry. I use entries on M5. You could use entries on M15, but this is an intraday scalping strategy. So M15 is a little bit too slow most of the time. So if you try and scalp on M15, I mean, it worked today on that one, but your M5 entry was tighter, probably. Probably the same, actually, looking at it pretty much, but normally M5. So the reverse alert is telling you that the buyers have taken control. So you've squeezed down hard to your average daily range. So we've exceeded the average daily range. Not in this case, we've just touched it, but you've got to the average daily range. And then the buyers have taken control. And that's when we enter, when the buyers have basically made their ground and started their move. And then as long as the buyers are going to continue to take control, that's what we're doing. We're just scalping out with around about a third to a half of an ADR. Dow's collapsed. DAX is stuck. Let's have a quick look at the NASDAQ. Couldn't be too much different, could it? So your NASDAQ opening range, your 5-minute ORB on the NASDAQ, you got 1-to-1 on it. Why didn't I hold it? Should have held that, shouldn't I? 7R again. How many times have we seen a 7R on these US opens on the opening range breakout strategy on the pre-market? Absolutely killing it. Speaking of that, I've just developed a new strategy based on this, and it's looking pretty tasty. Runs is that? Well, that's different results. So I've developed another version of the opening range breakout EA, which is what I've called an opening range breakout consistent rather. So it's trading this opening range breakout on the 5-minute pre-market. And the idea being is we go for a quick scalp. If it hits it, we're done. That's it. Only takes one trade. If it doesn't hit target and it breaks back down the other way, you go short. And if it hits target, you're done for the day. That's it. So we're looking for 1.5 R. But I've retested this on 2 and 3 R, and this is what I'm running the tests on at the moment. And the results are around about a 40% annual return with about an 8% drawdown. So it's looking pretty good as a prop strategy. But what it basically does is it gets in, and if it stops out in negative, it immediately just flips short. So all it's doing is it's following the momentum in the first 15 minutes, and it's just flipping along with the market. You get the odd day where you will hit your max DD, which I've set at 4,500, which is 4.5%, because obviously you've got 5% daily drawdown. So you get the odd day where it hits that, but the vast majorities of the day, it literally either banks the 1.5 R or it banks half an R virtually every day on these pre-markets, because we've been watching these pre-markets in here. And, you know, that one there was a stop out short, flip long, massive gain. Yeah, so look at the risk reward on these today. So that one we've just looked at, haven't we? So this was straight out the gates, 7R. This one, you went short initially, which stopped out, and then you went long and got 5R. So that was the entry, short, got down to there, didn't work out, came back, stopped you out, flipped long, back. I've been back testing it. I've just done the spreadsheet here. Look. So this was the initial result of the initial testing. 36 runs of the strategy over 12 months. Literally just taking the 5-minute, and all I was doing was testing different TP levels and different trailers. All 36 passed profitably. Admittedly, one of them was $2,000 in a year, which is nothing, but it didn't lose money, which is the important thing. Top ones banking between, well, more than half of the results, as you can see, banking $30,000 plus. However, there's some big drawdowns in there. So I need to look at why these big drawdowns are coming in. But this is the initial strategy that I looked at with 1.5 R, which banks off of 9%, it banks 39,000, 9% drawdown. So it draws down by 12K and banks 40. And then there's another version of it here, which is 3R, which is the second variation I tested, which is 37K off of 15K drawdown. So for prop, depending on how you want to play it, if you want to be super careful, then one of those two. But if this is only risking 0.5% per trade as well. So if you wanted to go in with more risk on this and you get a good run, this thing could be banking an absolute fortune. You're going to blow accounts, obviously, as you always do in prop. But I'm looking for strategies that have got decent runs and then stagnation, because this is where you make your 15, 20, 30 grand. Stagnation, you don't lose money or win money. You just sit there not making money, but you're waiting for these paydays. And the paydays, you only 3 paydays a year and you're done. That's it, 100 grand a year, isn't it? I'm just working on this at the moment, but it's a slight variation on the opening range breakout strategy in the fact that it doesn't place pending orders. What it does is it places initial pendings, which it takes. As soon as it takes that pending order, it then cancels the opposite order and places the stop loss. If then it goes to target, that's it. We're out. We're done. If it doesn't get to target and it flips short and stops out, it immediately places a buy order or a sell order straight in the market. No pendings, no waiting, no messing about. Straight in opposite direction. So basically, we think we're going long. Oh no, the market's faked it and it's going short. So you just get out and you go short. You flip the market immediately. As in here, look, bang. We were going long. Oh no, we're going short. It seems at the moment profitable. I've got to run more testing on it, obviously. But initial testing, the strategy with various different TPs and various different trailers, the trailers don't seem to make any difference whatsoever, to be honest. And which I can understand. The reason the trailers don't make any difference is because if you're targeting 1.5 to 3R on a 5-minute opening range break, it's either going to hit it or it's not. So by the time you've hit it, your trailer's only just started to kick in. So the trailer makes no difference whatsoever. So you don't even need a trailing stop. It's a case of get in, scalp, 1.5 to 3R, done. Simple, very, very, very simple strategy. The difficulty I think we're going to find is getting the orders on. So it's got to be a very tight spread, very fast execution broker to do it. And that's what worries me is prop. I'm not sure you're going to get that. Look at this Dow today. So your short break on the Dow is approaching 6R. So your long there was 1.5R tick. Your short is 6R. Awesome. Wish I'd have held that. Never mind. How many times does it flip direction? Until it's got out with a profitable trade at the moment. So all I'm doing at the moment is I'm testing it in and out because I want to see, I'm visually testing it to start with at the moment to see what happens in a whipsaw event. So obviously we get whipsaws off of the 5-minute pre-market as well. So I'm testing, I haven't tested the 15-minute yet. So at the moment, what I'm asking it to do is literally get in, and if you close in profit, thanks. Just forget, that's it, done for the day. If you close in loss, flip, and keep flipping until you close in profit. So the idea being is we go long, and if that doesn't work, we go short. If that doesn't work, we go long. If that doesn't work, we go short. And we keep doing that until we either hit a maximum of 4.5% drawdown, and then we stop for the day because we can't go any further because that blows our account, or we stop when we get a profit. So the losing days will be either those or the days where you take 3+ trades. If you take 2 trades, you're guaranteed a profit. If you take 3 trades, dependent on whether you're using the 3R or the 1.5R, you're either around about break even or you're profitable. I'm testing the 2R at the moment, which is what's running here. So this is testing 2R at the moment. It hasn't actually done it yet. We're just doing the 1.5s. Did I set this to ORB trail? Oh, I can't remember what I did. Yeah, I did. Yeah, so I've set this to use a trailing stop as well, because I just want to test this trailer with just testing it tighter, basically, to see if there's an edge in it. But, yeah, now it's going to see these initial results we've got are the ones with the really, really, really tight trailer. So I'm not expecting those to be good. I'm expecting the 1.5+ trailers to be better, which is what we're testing now. So up to 25K, and the drawdown's obviously coming down. So your drawdown's going to be high with a tight trailer, because in a whipsaw, you're going to get stopped out regardless. If it whipsaws, doesn't really matter what you do. You're going to get stopped out and chopped to pieces. So using a tight trailer with a market that moves erratically like that to your target is going to stop you out. Whereas if it moves erratically like that to target and you've got a wide trailer on, you're going to hit TP on it. So I'm testing whether or not it's good to use tight trailers. And I know I knew it wasn't going to be. So it's just confirming what my expectations were. So I'm expecting these to jump up to the 40Ks with 8%. So I want to test the 2R, because I didn't test 2R. I tested 1.5R and 3R. Both very profitable. So I just want to test the 2R, because I noticed when I was visually testing, we were getting close to 3R and then turning around and hitting stops. So I've got a feeling the 2R is actually going to be more profitable. Well, it's obviously going to be more profitable than the 1.5R, but I think it's going to be more profitable than the 3R. I think that's going to be the sweet spot. If you think about it, that candle is all we're looking for. So with that is all we're going to get. Look. We're not asking for the earth here. We're asking for a scalp. So when we break that level, we're asking you to get to here. That's it. It's not asking much, is it? But it's 50% more profit than the 1.5R, which produces 40K. So if that can produce 50K plus off of an 8% drawdown, and you can replicate that across 3 instruments, money. Just need to optimize it. I just need to do the permutation tests just to make sure that there is a bell curve in it. Basically, as you can see here, there's a bell curve. So these are your outliers. Your 10K lights, your kind of 40Ks. I would say probably the bell curve starts at about 35K, so it's around about there. So anything in here, really, regardless of market conditions, should be achievable. So it's anything from 35 to 15K. And this is, don't forget, based on 0.5%. You get a lucky run, i.e. you get 4 or 5 days in the trot where it just flies out the open. The initial cash balance is a 2R, and you're risking 1 to 2%. You're going to be taking 15K home very easily. You'll be passing prop literally in 3 days. You need to do it in 5, obviously, which is why I've kept the risk at about 0.5%, because you don't want to do it too quick because it's too risky. So anyway, I'll update you on the results of this, but it's just an idea I came up with based on, because one of the things I noticed with the opening range breakout EA was instances, right, today's typical, it didn't do it. But this is the pre-market 15 here, these green lines. What I've noticed is sometimes what you get is you get that initial break, which works nicely, and then it comes back down. For it to replace the pending orders, the opening range breakout EA, the market has to close back inside the opening range so that it can place a pending both sides. If it slams straight through, you miss the short. So, and again, this is another way to optimize this new version of the EA where it just flips itself, is if you get that TP hit, place a new range. So if we hit TP, take that 5-minute candle after the range, after the explosive move, bracket that, and then take the next break. So if we get today, like we did here, a big move to the upside, we've hit TP, we bracket that, we take that as well. But we don't rely on it closing back inside. We literally just dive straight in again in the opposite direction. So there's lots of things, there's lots of variations on it I'm working on. So, but what I don't want to do is have something that is constantly getting in and out and in and out and in and out. I want it to get in and out within 15 minutes. That's it. That's it. This is our cash balance. It's done. I want that move to be me done for the day. I want to be off doing something else 15 minutes after market open. That's what I'm working on a variation for, which is promising at the minute. We will see. Have you looked at how many times these? Have you looked at how many times these big breakouts return back to mean during the day? No. But what you're describing is basically an ADR reversal. So ADR reversals on the indices work quite well, but you don't get them very often. We don't hit ADR very often on the indices. If you think back to live rooms, the amount of times we've actually got an ADR on these, it's not often. That will change, I think, but at the moment, the volatility is so big. Our average range is on, like the NASDAQ's 160 at the moment. Look at a normal bull market. A normal bull market, we're looking at candles somewhere in the region of 119, 130, 160, 200. And look at this. Bear market candles. 597, 890. Let's pick a small one. Small one's 320. Our volatility at the moment is twice as much as a normal bull quiet. We're in a bear volatile. And we're entering, if you look at the candles now, and this is what I was saying, it looks like this could be us entering back into a bull calm, bull quiet. Look, volatility has dropped quite significantly. These candlesticks are now getting smaller and smaller and smaller, back to how we normally are when we just sit and we buy the lows. We just buy all the dips. So we're starting to get back into that. So if that is the case, you need to be in and out of this thing quick. When that cash balance goes in and they move that market, within half an hour, that's it. You've missed it. If you're going to scalp intraday. So you need a strategy that's more, that's faster and more adaptive, basically. Which is potentially what this is looking like being, that 5-minute pre-market. So, but I don't think this way to trade it, the opening range breakout EA, it doesn't trade this 5-minute pre. It was never designed for the 5-minute pre. It was designed for the 5-minute post and 15-minute post. That's the ranges it was designed to take advantage of, and it does that very well. It's not designed for these because these can be a whipsaw, and in a whipsaw, if you get stopped out, you need to be in straight away, because although we're measuring things over 5-minute candlesticks as human beings, the market isn't looking at candlesticks. The market is making a move, and then it's changing the direction of that move. It doesn't care whether it takes 1 minute, 3 minutes, 5 minutes, 7 minutes, 10 minutes, 20 minutes, whatever. It's moving. So we are waiting for a candle to stop and hoping that the price stops within an area so that we can take advantage of it. It's not interested in that. So if we get stopped out and the market is moving, we need to jump back in fluidly with that market as it's moving. So it needs to be adapted to trade differently, because that initial volatility in that first 10 to 15 minutes is a lot faster. As we're seeing here, look at the Dow today is an absolute prime example. Yeah, we flew out the highs for 10 minutes and then we absolutely collapsed for 25 minutes, 30 minutes, straight down. If you were waiting on this, you missed all of that movement there. You needed to be hit TP and then flipping short as fast as you possibly can, because it doesn't hang around, as we know. Because we keep seeing it every day doing things like this and just trying to benefit from it more, basically. Swiss yen is dumping. It was when you said that, Brian. It's changed its mind. So that was your ADR entry there. You're looking for at least a third of an ADR. You got 31 out of that. Half an ADR is 56. Aussie dollar Swiss has just exited. Sorry, Swiss yen's just exited. Yeah, sorry, that's hit TP. Yeah, Swiss yen hit TP. Where are you? There. Look at that for an ADR reversal. Oh, that was second entry. So that was second entry. The first entry was there, look. So that high, that was a higher high. That was your initial reversal alert. Entry, exit. That was your second entry. So your second entry, mind you, you would have taken the first entry if you're taking them. So it doesn't really matter, does it? But That was 6.6. Oh, we just hit TP. So that would have just been TP off of that reversal alert, 1/3 of an ADR. By the skin of your teeth. 1% banked. Be nice. So without ADR, you wouldn't know when to take the opposite trade. Just looks like these big breaks often quickly reverse. Yeah, but this, again, this all comes down to that good old timing thing that we can't do. You cannot time a reversal like this. Do you see what I mean? This Dow is a really good example today. So we pushed at the open. We pushed again for a second candle. Yeah. When you're scalping, you're normally waiting for price action confirmations. So the price action confirmation of a short entry was there. Yeah. So we got an initial long move. We got a higher high there and a higher low. Then we got a lower high and a lower low and a bearish engulfing. So that is your signal to go short. You've missed all that. Right? That move you've missed there is as big as the opening range, 95 pips, 93. So what I'm looking at is let's get in fast, right? Let's hit our target, right? And then when we've hit our target, pause, wait for the candle to close and then bracket that candle. It's either going to rally again, we're either going to get that massive breakout or it's going to revert. And if it reverts, fine, we'll jump in short on it and we'll take another quick scalp. If you can get 2 moves out of it, half a percent risk, you're banking 1.5% a day, literally in 10 minutes, and you're done. So obviously this has just come straight off that monthly look. But look at the size of the candlestick. This is what I'm trying to try and take advantage of by getting in faster, is not waiting for the candle close. So if we push and pull and it doesn't work out, as soon as that stop loss is triggered, the EA goes short. It goes, right, I'm out. So it's an always in. So, you know, always in strategies are never out of the market. This is an always in variation. So, which is why I call it opening range breakout. What did I call it? Opening range breakout continuous. I can't even remember what I called it. Consistent. Wrong word. So it's basically, it's always in. That's the thing. So you push up and as soon as you're out, you long, you short it. But there's lots of different ways to do it. And what I don't want to do is suddenly go, oh, right, brilliant, we've made a 3R return. Let's go short. Why am I going short? There's nothing to tell me to go short. So at that point, we could pause and then bracket that candle when it closes and then take it. ORB Whiplash. That's a good name, Brian. The Whiplash EA. Whipsaw. There you go. So it's starting to bank decent profit now, look. Because we are increasing our trailer. This is the thing that kills all. I keep saying this over and over. Trailing stops stop you out. They reduce your profit. They do reduce your loss, but they also massively reduce your profit. They don't give your trades opportunity to play out. So I'm going to do all these tests again without trailers in a minute. This propulsion is getting a little bit stuck. Yeah, there we go. I will be testing that. Sounds like a great strategy idea. Yeah, it's good. It will be, hopefully. But it's just a variation, as I say. It's a completely different logic to the opening range breakout. I'm not quite sure how I'm going to shoehorn it into the opening range breakout because I've had to basically strip out half the functionality for the ORB EA because it's totally different functionality. The always in. The other one is built to be a lot more conservative. This is a lot more, not so much risky, but it's a lot more, it's a lot quicker. I suppose it is a bit more risky, but also more profitable. You want to grab those quick moves, those like bang, 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 in, out, done. Half, 1.5. It's exactly what we saw this morning or this afternoon. It's that. But, you know, testing it with 7R as well. I mean, we get these 7Rs, but the amount of times you don't get a 7R, it's not worth it. So another thing I looked at was taking 2 entries and using 1 trailer. So 1.5, and 1 trailer. But the trailer basically virtually always just banks what the 1.5R is. So it's actually better to go in with 1% risk on 1 trade than it is to try and take 2. It doesn't give any edge because when you get the whipsaws, you lose twice as much, twice as quick. So on the whipsaw days, you don't get an opportunity to actually make your profit back. Trading is all about swings and roundabouts. Every time you think, oh, that's a better way to do it, it's got a problem. And there's never one way that solves every problem. So it's trying to find the one that, for me, is the most consistent with the smallest drawdown because I want to try and use it more on prop than on anything because it's scalping. Prop is beautifully set up for scalping, not for position trading. So New Zealand dollar Swiss has got totally stuck, look, from that initial entry. Oops. Literally just gone sideways since, and then we've had this little bit of a rally up, and we're getting more of a continuation on this. So looking for a second entry up at that high. Hopefully. It's half an ADR, 25. So that's an ADR away, basically. So if we can tag that high, should get a second entry on that. But that's still pushing that New Zealand Swiss. So all these Swiss franc moves that we got, basically all undone pretty much straight away. Look. Really nice ADRs today. Right, that's all I've got for you today. I need to go and do some more development work. So I'm going to leave it there. We haven't done anything on oil today. Basically, obviously, today is the no news day. CAD's closed today. We're waiting for these PMIs. So there's nothing much today. So literally all we've had is kind of that or that. So Euro and the Swiss franc will be moving off of those PMIs tomorrow. And then we've got the pound and then straight after it, the US dollar. So I suspect tomorrow is when we're going to start any moves, if we are going to start some moves and get those underway. The US dollar, obviously, there's a lot of Pentagon spokesman. There was no explosion here this morning. What? No, there was. I bet that's Russians hacking the Pentagon's Twitter feed. Initial reports of large explosion near the Pentagon. When was that? 3 o'clock. All right. Well, that explains the. Oh, no, it doesn't. No, that's 3 o'clock there. It already started moving before that tweet came out. So I would expect, because we've had no massive reaction to what Bullard's been saying this morning about potentially more interest rate hikes, I don't think the market really is swallowing this at the moment. But we have to be a little careful that we are going to start to get some strength coming through on the US dollar. There does seem to be a case because of the interest rates, the inflation figures, sorry, that there is potential more available in the US from an interest rate rise perspective when the website loads. So we got good unemployment figures for the US. We've got inflation coming down at a decent rate, and it does allow them to put one more in at least, I think, hike. We're getting one more on the New Zealand dollar, but obviously we need to know what happens with this debt. So there's the US dollar at the moment over the next month, I think, is probably going to be the most volatile that we can possibly get, because we've got this massive debt problem with the US where it could go crazy in one direction or the other at any moment, because the Fed could come out and say, oops, we've screwed it, or this is how we solve it. We've got obviously the one thing with the war at the moment with Russia, which is obviously always looming over us. But we've also now got the possibility of this not being the cap, which means we've got a potential rally ahead for the US. So over the next month, we're going to find out which of those is true and what is going to happen. And we've got potential for a big move on the US, either rally-wise or potentially a big collapse. So need to be a little bit careful with these. If we do get the rally on the US, the indices are going to react opposite and drop. If we don't get the rally on the US, I think we could get back into a bull market and start business as usual and start just buying the dips on the S&P and making money as we used to. So we'll see what happens. But it's a volatile kind of month coming at the moment, I think, this month, over the next, towards the end of this month and into August. And then, into June. And then after that, we start hitting summer trading where everything just tightens up and contracts again. So, and then I will look at probably potentially changing the RSIs again back to the 14 on the hourly. So we'll see what happens with it. But yeah, so oil's just popped, as John's just said. Potentially that is a knee-jerk reaction to what's just happened with that Pentagon tweet, which doesn't seem to be a thing. Be interested to know who tweeted that out. Somebody's going to get into trouble. Right, so I'll leave it there today. Anything you need, I'll be in the Telegram group. Back tomorrow morning, 7:50, and back at 2:20 tomorrow afternoon, as usual. See if we can scalp more out of the DAX. Keep an eye on the Feudal Crest competition. See if I can get myself up those rankings a bit more. 78th I am, look. Now, look at that. 100% strike rate. Not bad, eh? It's been a lucky day. Not all days are going to be this lucky, are they? Yeah, so back tomorrow morning, 7:50, 2:20 tomorrow afternoon. If there's anything else you need, let me know in the Telegram group. We'll try and do a bit more analysis tomorrow morning if things have moved. But as I say, tomorrow is going to be all about PMIs. So tomorrow's opening range breakout on the DAX is going to be tricky as anything. And obviously tomorrow afternoon on the US indices, because it's 15 minutes apart. So we will watch those carefully tomorrow. All right, so have a good day, everybody. I will be back tomorrow and see you then. Have a good one.